Well, hello and welcome to this Money Control live stream. You're watching Moneycontrol Pro Budget Town Hall, where we will be talking about the investment themes that one should be keeping on their radar after the budget. Now, the big picture of the budget is its focus on growth through higher capital spending and simultaneously sticking to fiscal prudence, which in the near to medium term will mean lower interest rates for the private sector, encouraging them to make more investments. Now, this is what the government wants, right? More investments from the private sector. And then, of course, there was a slew of tax swaps that were announced under the new tax regime, which aims to leave more money in the hands of the middle income group. And that would come as a boost for consumption. So without any delay, let me bring in on board our experts from MC Pro or Moneycontrol Pro, who will be dissecting these announcements and how they will impact your investments. Joining us in our studio is Madhu Chanda De. We have Bharat Jenani, we have Nitin Sharma and Neha Dave in the studios, and we have Sachin Pal, Nandish Shah, who will also be joining us. In fact, Jitendra Gupta is also there to talk about the infrastructure space. So let me kickstart this discussion with asking Madhu. Madhu, this is a fiscally prudent budget, so to say, because government is working within FY24 a fiscal deficit target of 5.9%. In fact, even FM Sitharaman has called this a beautifully balanced budget. So how do you think this budget will bode for corporate earnings going forward?
Yeah, that's an absolutely valid question, because, you know, the nuances of the budget doesn't get remembered, beyond a week. But what stays are the big impact. And as you rightly pointed out in your opening remark, the big impact of the budget is the fiscal prudence, and hence the gross and the net borrowing figures are absolutely manageable, and that is not going to exert incremental pressure on interest rate. As you will recall that given the inflationary pressure, RBI has already hiked interest rates by 225 basis points, but the budget doesn't create any incremental damage. So that's a very positive news for corporate India. And also this super focus on capital expenditure, which is going up by 37%. In fact, this is a landmark budget in the sense that even though there are 9 state elections and 1 general election, there is actually a reduction.
There is a lack of populist measures in the budget.
And not only that, there is a reduction in revenue expenses without interest payment. Right. So that's pretty bold, and there is so much focus on capital expenditure from the government side, and with stable interest, that will mean that somewhere down the line that will crowd in private sector investment, which is an extremely good news for corporate earnings and the markets.
Right, Madhu, sticking to what you said about RBI. In fact, looking at pausing interest rates maybe after the next policy that's coming up next week. There was there were hopes that the last one would be the last interest rate hike by the RBI. But what is the street saying? Do you expect another 25 basis point hike coming in the next policy as well?
See, given that the Fed has also hiked rates by 25 basis points, well, there's a likelihood of a 25 basis points rate hike by the RBI. But we are kind of very near the end of this tightening cycle. Having said that, it also depends on how the global scenario picks up. The moot point is the budget has not created any incremental damage to the interest rate outlook. So it all depends on the global situation, how RBI will act henceforward.
Sure. The global situation is what we'll be watching out for. But I would like to tell our viewers, if you have any stock-related queries, do send them in to us with the hashtag Moneycontrol Budget Town Hall, and we will have them addressed by our great lineup of experts. Now, moving on to Jitendra. There has been a lot of impetus on the infrastructure sector. In fact, has got a lot of prominence with the government, in fact, announcing a figure of 10 lakh crore for capex, which is 33% higher than what was budgeted last year. So there is a higher impetus on capex. That means they are looking to boost private capex, investment rather, which has been lagging in the last few years. So, Jitendra, coming to you, when do you think private capex will start kicking in? Does the budget have the ingredients to kick off faster uptake in private capex? And what are the stocks and sectors that one should be watching out for in this space?
So I think it's a dream budget for as far as infrastructure is concerned, and obviously we needed one more year to support the private investment because the capacity utilization at the at private sector is almost at 75 to 80%, and you have a credit growth which is growing at double digit. So what you needed is one more year of support from the government. I think the next year we could see, because of the obviously the higher consumption and higher demand from the consumer, from the exports and from the domestic market, we could see that this infrastructure spending have a cascading impact on the overall demand improving, and going forward we could see that the private investment coming up in big time. Going forward, maybe in 6 months or 8 months time, we could see that the private capex cycle could actually kick start. We have already part of this is already reflecting in the numbers, and 6 months back or 8 months back we were not having enough capex in the private sector, but that has started of late. Last 3-4 months we have seen significant announcement being made by the private sector companies, particularly in the consumer facing industries. So I think it will have a cascading impact or a larger impact would be seen going forward, maybe in 6 to 8 months time.
Right, a dream budget when it comes to the infrastructure, from an infrastructure spend standpoint. Moving on to Sachin, coming to you, I mean, there have been multiple announcements that were made in the green energy space as well. Government has set out a target of 2030 for its net zero target, and the policy support and long-term potential have already attracted multiple companies, including Reliance Industries, in fact, NTPC, JSW, and a lot of other Indian conglomerates. Which stocks do you think are now best poised to gain, in fact, from this shift to renewables?
Yeah, hi. So even in this year's budget, we saw a number of big ticket announcements related to the renewables energy space. Even in the last year's budget, we saw the PLI scheme getting enhanced from 4,500 crores to 24,000 crores last year. So the benefits of that will start to accrue in the next 12 to 18 months. So renewables as a space and as a sector remains a very mega trend, and the government remains very focused in terms of being able to grow the pie of the renewables energy in the total power sector as well. So in terms of the stocks that you can play across to on this theme, they're not very much listed players which are fundamentally strong. One stock which we can look forward to is definitely Borosil Renewables, which is the only pure play renewables company in India with the solar, which supplies solar glass panels. So the company is actually enhancing its capacity from 450 tons per day to almost 1,300 tons per day through a combination of acquisition as well as the capacity expansion. So although one thing to watch out for that the policy support in terms of the import substitution, import duties have been taken off some bit, but that remains a very strong play in the renewables energy space. Other companies are also there, but some of them have a very small presence in the renewables energy space. So this is one thing which you should definitely watch out for.
Right. This is one thing that we should be watching out for. Let's talk about all the tax SOPs that were announced in the budget, Bharat. In fact, government has in fact reduced the rebate as well as the number of slabs, and has of course increased the exemption limit as well. Do you think this will succeed in boosting consumption at the rural as well as urban level? Because it has only happened under the new tax regime. So what do you think the retail stocks look like going forward?
Yeah, so good morning to the viewers. So definitely the measures that were announced for the tax SOPs, that is mainly for the newer regime, and the government has stated that they want people to shift from the older regime to the newer regime. So newer regime, definitely you have a greater exemption, you have a provision of standard deduction which was earlier not available in the new regime, and that is now available in the new regime. So that will give a significant amount of money in the hands of the people who are there in the newer regime. But I want to highlight that as we had earlier also pointed out that instead of giving direct money in the hands of the consumer, more emphasis will be through the indirect way. So we have seen that in the rural related schemes, we have seen a decent increase of about 10 to 11% agri-related as well as rural related schemes, be it the PM Awas Yojana. There has been also a lot of SOPs given to the agricultural space. Right. Also, another thing is that the capital expenditure has been increased. So this will also, create a lot of job opportunities, especially in the mid-tier as well as the rural areas where the construction work is there. So indirect way, there has been a lot of money is being given. So definitely that will boost consumption.
Sure. Also, let's also talk about the tourism space. The government has said that it will go in mission mode to promote tourism, right? So which stocks do you think are looking attractive now? IHCL, EIH and the likes? Yeah,
so definitely this was perhaps for the first time that tourism got a mention in the union budget. Right. I think clearly the focus is there to develop tourism, and the government has been they have stated that the mission mode that you said, a lot of they'll work in collaboration with the state governments as well as the private sector to boost tourism. So initially they have announced that they'll choose 50 destinations where the care would be taken to give infrastructure facilities to the tourists, be it tourist guides, be it the food facilities that will be upgraded. So definitely this will give a big boost to the tourism space, and tourism is also important from it has a multiplier effect and it gives a lot of job opportunities. So right. That in turn will job focuses the prime area of the government.
And of course after the pandemic it bodes very well for the tourism sector, because that was one of the worst hit sectors during the pandemic. Definitely. Right.
So as far as the stocks are concerned, definitely the hotel companies will stand to gain. Indian Hotels, Lemon Tree, East India Hotels, and Royal Orchid as well. And apart from that, the tourism-related companies that are there, like aviation is also will receive a big boost. So Interglobe Aviation is there. We have luggage companies also that will VIP and Safari. And even the trip planners that are there, Is My Trip, that will gain from this focus on tourism.
Sure. Sticking to the consumption theme then, when we talk about rural consumption, the allocation for rural development has been increased by 18% year on year. And this could create a multiplier impact, leading to a recovery in consumption and an increase in disposable income in the rural markets. Coming to Nandish then, Nandish, do you think this would be enough to revive rural demand growth, given the kind of commentary we've seen from the likes of HUL and like after their third quarter earnings?
Yeah, hi, good morning. Thanks for having me. Yeah, I feel that absolutely we are going to see a big boost in terms of rural consumption, because I guess from last 1.5 years, rural has seen quite a steep decline in terms of spending and in terms of disposable income. And with even with raw material inflation coming off and volumes picking up, we expect that this budget can boost the likes of HUL, Dabur, ITC, Marico.
Right. So consumption did get a boost from the announcements that were made by the FM. Right. Coming to you, Nitin, there has been quite a push for digitization in the budget and a higher outlay for the IT sector as well. In fact, even for the semiconductor space, the government has earmarked somewhere around 3,000 crore for the Indian mission, in fact, Indian semiconductor mission. Now, will this kickstart the development that the semiconductor and display manufacturing ecosystem in India?
Yeah, good morning. So that is a very interesting thing that the government did. We also have to understand the announcement made with regards to the AI learning center, as well as continuous push towards developing an semiconductor fab in India. So out of the 3,000 crores that has been allotted, this is a fifth of the total IT ministry's budget. And around 1,800 crores would go to the first time setting up of the assembly unit, packaging, testing, display unit. Then another 1,000 crores is earmarked for the modification of existing fabs that are there. Having said that, we already know that Government currently is giving up, adding up to 50% of the cost of setting up a new semiconductor fab. Globally, when you see it, last 100 years, the conflict was about the oil and the natural resources. But next 10, 20, 30 years, the conflict would be more in terms of the semiconductors, because now semiconductor goes into each and every item, from cars to mobiles to all other devices.
We did see the chip crisis weighing on the automobile space in recent times.
Yes,
anyway.
yes. So that is one space that every nation is trying to move into. We have seen an example of TSMC, the Taiwan's major fabricator, moving their or setting up a new $65 billion fabrication unit in Arizona desert of US. Similarly, Italy, France, and other countries also trying. So this step is in the right direction. And once the Vedanta Foxconn fabrication comes live, then another set of things within the ecosystem, which include display, testing, packaging, which is overall part of the value chain, would develop as well, and creating lakhs of jobs.
Right, job creation is one thing that this whole semiconductor issue will resolve. Coming to you, Neha, we saw the insurance stocks take quite a bit of a knock yesterday. In fact, the budget has come as a big dampener for some of these players. What's the impact of this 5 lakh plus premium taxation? Which are the players that will be most impacted by this?
Yes, in a very interesting move, the budget has brought all life insurance policy under that tax bracket or the tax net, obviously subject to a certain threshold. And that threshold is a premium amount of, aggregate premium amount of rupees 5 lakh per annum. So all the policies which are below that obviously would continue to enjoy the tax-free status. But the policies with more than 5 lakh premium, on maturity, the proceeds will be taxed in the hands of the individual at the marginal income tax rate. Now, why would the finance minister want to tax a saving product or an investment product? And this is a sunrise industry, and a lot of insurance players have got listed in the past few years. Right. The main objective, what it seems to be like, the budget wants to remove the disproportionate tax incentive structure which is enjoyed by insurance products. And also to a certain extent limit the mis-selling of the insurance products. And though on prima facie it seems as negative for the insurance industry, obviously their top line will be impacted in the near term. In the long term, it would be beneficial, as it would encourage to insurance companies to sell more of pure protection products, and that too in the tier 2 and tier 3 cities.
Does that mean it's a good entry point in some of these life insurance companies?
Yes. So sentiment-wise, the entire sector has been impacted. There will be the flows, the saving flows will get shifted to the banking sector in terms of fixed deposits or to the mutual fund. So there will be near-term impact. If we talk about stock specific, it depends on what is the product composition of a particular insurance player. The insurance player that has the highest non-linked saving products in their the overall product structure would be impacted the most. Now HDFC Life already has clarified, the management has already clarified that they will be impacted, and the impact would be around 10 to 12% of their top line, because the savings product is constituted a higher proportion for them. The other insurance companies haven't given the impact or the bifurcation in terms of the ticket size of the insurance policies that they sell. But it would be a very easy to guess that SBI Life would be least impacted, and the reason being that the insurance policies that SBI Life sells through its bancassurance partner, that is SBI, is typically a very low ticket size, which will have a premium income or a premium amount of less than 5 lakh. So the impact would be very less on SBI Life. So the worst impacted will be HDFC Life, and the least will be SBI Life. ICICI again would be impacted to a lesser extent, primarily because the management has been focusing on growing the pure protection products, which is high margin products, and which won't be impacted by the budget move. So yeah, so in terms of stock, there was a healthy correction yesterday. In fact, a lot of steep correction, I would say. Yeah. So SBI Life looks very attractive at current level, because it is least impacted, and also because it has certain business trends which other players don't have.
Right. So SBI Life looking very attractive from the life insurance space. Let's also get in some viewer queries then. We've been getting quite a few queries, my producer tells me. So the first one comes in from Satya CK, and in fact we were just talking about insurance stocks, and Neha has said that SBI Life is the one that looks the most attractive in this basket. So let's move on to the next one on that. In that case, Adit has sent us a query, and he has asked us a question on the infrastructure space. So the capex boost announced in the budget, which is the infrastructure stock that one should buy at current levels? We can go to Jitendra Gupta and get him to address this query. Jitendra, coming into you, we did discuss in details about how the budget bodes for the infrastructure, given the greater impetus on this sector by the government. Which stocks would you advise investors to look at the current juncture? All right, Jitendra, can you please unmute yourself? I think you're on mute.
Sorry. Am I audible now?
Yeah, please go on.
Hello.
We can hear you, Jitendra.
Okay, so see, I would say that at this point in time, it is prudent to stay with the companies which have execution capabilities, strong track record, and obviously the robust balance sheet. And we have internally top picks in the infrastructure space, which includes L&T. Again, it's a larger play. It's a diversified play. And second, in the mid-cap space, we like HG Infra, which is again a very good company in terms of it has a strong order book, execution track record, and of course the balance sheet is quite lean. So we have two stocks from the infrastructure space as of now.
Right, Jitendra, we are also getting in some queries from the defense basket. What is your view on HAL and Mazgaon Dock at the current juncture?
Okay, so yeah, see, we did not see much action in the budget as far as the defense is concerned. But as of if you look at the current order book of some of these companies that you mentioned, I don't think you need any mention from the budget point of view, because a lot of announcements have already made by the concerned ministry. So I think Mazgaon Dock and the other stock that you mentioned, they have a strong order pipeline. They have an order book of almost 4 to 5 times, which is enough for the next 4 or 5 years. So as far as visibility is concerned, they have a strong visibility. And in terms of the share prices, I think they are at good point. They are trading at good price. Last, I think 15 days, 20 days. In fact, after the budget, they have corrected marginally. So in terms of valuation and price point, I think they are trading at attractive valuation and attractive levels. So one can hold them for the next 3-4 years. In fact, the order pipeline, which was delayed, some of large projects were delayed because of the COVID-19. I think most of these companies' commentary that if you go through their conference call and analyst call, most of these companies are saying that these projects will be awarded in next 1 or 2 months. So I think they offer a very good opportunity at current price.
So defense stocks looking attractive. In fact, Jitendra is advising us to hold on to those counters for 3 to 4 years. Coming to the consumer basket next, K. Manian has written in, and he wants to know whether or not, or which consumer stocks stand to get impacted by the budget announcements. Coming to you, Bharat, we already discussed in details how the in fact announcements bode for the consumption space. So which are the sectors, or in fact which are the stocks that you would recommend in this sector, and one can look at buying into right now?
So clearly the rural space was in the focus. So the rural facing retail companies like Relaxo Footwears, which have a huge presence in the rural areas, they would stand to benefit. VMart also would stand to benefit. So rural, there was a lot of pressure as far as the inflation was concerned. It was which we saw over the last 6 to 9 months before the budget. So these rural stocks were, and particularly the lower price points were more impacted because of higher inflation. So given that the rural incomes would be boosted, we could see with the stocks performing well. So Relaxo Footwears and VMart could be looked at. And on the consumption side, there was a big boost for the tourism sector as well. So you could look at stock of the hotel companies, Indian Hotels, Lemon Tree. Even if you see Indian Hotels, the commentary on the demand was very strong. And now with the government, focusing on getting more airports and, so the connectivity, they have chosen 50 destinations. So that will boost tourism. So that clearly is the focus area. And tourism-related stocks, VIP, Safari, and even aviation companies, you can look at Interglobe Aviation. So these stocks would look at.
So rural-facing stocks as well as tourism-related stocks are looking attractive after the announcements made by the FM Finance Minister Sitharaman. Moving on to the next query, this is coming in on Patanjali, Dabur and HUL. These are again your sector, Bharat. Nandish, right. So we will be posing a question to Nandish in that case. Nandish, how are these stocks looking now after the budget announcements?
Yeah, I track Lever and Dabur, and both currently looks to me better placed we're witnessing some green shoots in the rural markets and also the raw material prices coming off. So I'm being positive on Dabur and HUL both. And as a house, we do not track Patanjali.
Right. As a house, we don't track Patanjali, but Dabur and HUL looking attractive at current juncture. Moving on to the cement space, I think Jitendra, I'll come to you for this one. Sachin, I will come to you for this one. Ambuja, there is a query on Ambuja. Should somebody buy this stock at current levels? And also, is there any other cement stock that is looking attractive at the current juncture?
Yeah, so the cement space actually also got a big boost from the infrastructure spending. And also, one key thing to watch out for was the allocation jump in the PM Pradhan Mantri Awas Yojana. So there was a 66% jump in the Pradhan Mantri Awas Yojana, which again should bodes well for the affordable housing and indirectly the cement sector as well. So overall, the volumes of the sector have been on an uptrend, and most of the companies in the sector are actually moving up in terms of their capacity utilization levels. From a stock standpoint, Ambuja is now owned by the Adani Group, and there are a lot of developments going on and that space. So I would stay a bit cautious around those levels. Historically, the business has enjoyed a very strong balance sheet and has been on a very cash-rich balance sheet. But that could change going forward as the group has aggressive plans in terms of its ambitions. So I would say let the dust settle in terms of the whole developments going on in terms of the Adani news. And on the sector as a whole, I think there are a lot of volume growth that would come in the next 12 to 18 months, given that the government is really focused in terms of the project execution ahead of the 2024 elections. So we should see a lot of volume pickup. On the pricing front, since most of the players are right now chasing volumes, so the pricing should remain a bit firm or subdued, despite being a seasonally strong quarter from Jan to June for most of the companies. So overall, the sector remains well poised for growth. We really like Dalmia Bharat from the large cap standpoint, and they've also announced an acquisition in the central region. So that again bodes well and catapults them into the central region and diversify their presence away from the southern as well as the eastern markets. So one can look forward to that stock from a long-term standpoint.
Well, Dalmia Bharat from the cement basket looking attractive. But hang on, Sachin, another query for you. Any power or green energies, in fact, energy sector stocks that one can look at buying given the government's clean energy push at this juncture?
So the most of the players actually in the power sector are diversifying their presence away from the traditional sources to the newer energy sources like the renewables as well as the hydrogen. So NTPC, the likes of NTPC, JSW Energy, Tata Power have been moving their investments into this space. And so right now the contribution from these sectors is like very small, but these are expected to grow in the future. So one can look forward to buying them in small chunks, so from a long-term standpoint.
Right, the next query that's coming in is from the railway pack. One of the query, in fact, one of our viewers wants to know if it's a good time to invest in railway engineering stocks despite the recent run-up. Jitendra, I would like to come in to you for this query. Jitendra, can you hear us?
Hello, can you repeat query?
One of our viewers wants to know whether it's a good time to invest in railway engineering stocks given the recent run-up that we've seen in some of these counters.
So railway, as you have, the railway capex has been increased, and it's really peak time for the railway capex, and we have seen a significant increase in the railway capex over the last 3-4 years, and because of that, order book of the existing companies has gone up. We particularly like PSU companies because of the balance sheet and strong order book they have. So we like Aircon and RITES within this space. Anybody who wants to participate in the railway space, they can look at these stocks, particularly in the light of the fact, obviously they have run up in the last 3 to 6 months time period, but last 15 days I think they have corrected marginally by about 20%. So this provides a good entry point from the long-term perspective.
Well, a good entry point for railway stocks at this juncture. Well, before we wrap, I would like to come to Madhu for a question on the markets. Madhu, we saw a gyration of 2,000 points on the Sensex yesterday. In fact, initially there was a bit of a euphoria because it is a balanced budget, as everybody is calling it. So, but then later on we fizzled out for other reasons. Given the fact that most of the major announcements and events are out of the way, and we have the RBI policy to look forward to next week, do you expect the markets to now, do you expect the volatility to subside and the markets to in fact head higher and reclaim the 18,000 mark anytime soon?
See, it's a very difficult call to say when the markets will reclaim any particular level, because we have to accept that 2023 calendar year is again going to be a year marked by volatility.
Right.
But having said that, we have negotiated a difficult year of 2022 also, and Indian markets were relative outperformers. Now, of course, the market is clouded with this particular issue. I'm sure the dust will settle, in few months or few weeks, we don't know. But, this volatility is an opportunity for any investor. As we were discussing some of our conviction picks, any investor who is looking to invest in the market should be ready with their shopping bag and should be really looking for the lows in the markets and sit quiet, sit tightly, because the markets will give you a return. Whether it happens in 3 months, 6 months is anybody's guess. But this is the beauty of the market. You should know the stocks that you need to buy and make the most of the volatility and not be scared about it.
Right. So make the most of the volatility and don't be scared about it. And of course, keep your shopping list ready as per Madhu. Well, with that, we've come to the end of this Moneycontrol Pro Budget Town Hall. I would like to take this opportunity to thank all our panelists for joining in and addressing all the queries that our viewers had posted. Well, then that's a wrap. And keep watching Moneycontrol and stay tuned for all your other financial news and market updates. Thanks a lot for watching.